Disclaimer before we get started that I have to post. There we go. Past performance not indicative of future results. This is for educational purposes only. Trading derivatives has substantial risk. Please be aware of the risk and be prepared to handle any gains or losses that come with that. You can blow yourself up pretty easily. Have great risk control in your trading. It's the only thing I can significantly recommend on a regular basis. And this is for educational purposes only. Let's roll. Okay, let's get rid of this. So, number one, I was down last night in Asia. I couldn't have been more wrong about what I thought would happen overnight, right? I was looking for continuation and a push up into 28.50. I was wrong. In addition to being wrong, I wanted a long and took one right here approximately. 28.40, I believe, is where my entry was. 28.40 or 28.40 and a quarter. And my stop was 28.38. And I stand corrected. It wasn't here. It was right here at 28.40, right into that anomaly. So let me talk about that for a second. First of all, the anomalies usually hold. Asia was really quiet prior to that open. And the zone, it was the second test of that zone at that period, because the first time in right here at around 7:30, that zone held just fine. And my assumption was that zone would hold. I was taking it near the back, and I thought I'd be all right. I was utterly, completely, and totally wrong on the trade. That being said, okay, my stop was 2 points, and it was the only stop of the night, and that is completely acceptable. Let me go through and explain why that was an issue. My next level was 28.37. 28.37 was good for a point. Here, I'll show you on the smaller range chart. 28.37 right here. See how it came in right at 37? That was good from 28.37 to 28.38.50. I waived that trade off. I wasn't going to lose more than 2 points, and I'll tell you why. At this point, my original analysis had gotten blown up in the wind. I didn't expect this to happen. The character of the PA had changed, and I didn't recognize it. For whatever reason, I just didn't recognize what was going on. I didn't think I should have gotten smoked like that, and I thought I should have at least been able to get a test of VWAP before rolling back down. And then most importantly, remember, I use Asia. Most of the time, I'm correct on my Asia calls, and I use it to build my cushion during the day. Remember, in the smaller account, the Top Step Trader account that I'm doing, I got a max stop of $500, and I've got a personal stop of $300 in there because I'm trying to demonstrate how to trade both a large account and a small account, right? So I wanted one shot to at least rectify my trading account for the day, right? So if I took another stop and I took 2 contracts, so that put me down $200 on the evening, right? $225 specifically on the evening, and plus the commission of $350 a contract. So I have one trade in that small account to make today, and it's going to have to be a good setup. And the problem is volatility is increased, giving me both good opportunities and bad opportunities. But I could have taken the trade in my larger account the second time. I just didn't recognize it. And I'd spoken to Bill last night, and I said, look, I just don't know what I didn't see on the breakdown. And his answer was, he didn't see anything. Normally, so let me go to this. If you look at, I'm going to run past the open just so y'all know. There's no way for me to get it done without doing that. If you look on this Asian session right here, if we went to the overnight and you looked at that 28.25 level, that was at 28.26, and that point of control and that volume point of control was perfect. That was Monday night going into Tuesday session for a big push. And normally at that volume point of control and that TPO point of control, which is what that 28.40 was exactly, right? That's usually good for a 2-point trade for me, okay? It just didn't work last night. Now, here's the deal. I knew when that blew up, see how the profile underneath gets really ugly? This was all that we had to hang on to from that day to hold us up, and it wasn't very prominent. It was right here at, I'm going to spread this out so you can see it. All we had to hang on to was this value area low right there and that anomaly right there. And you'll see that that anomaly held, that 28.35.50 held beautifully. I'm going to switch back over. Okay, so here we were, we came in. Here's where we came into 28.37. This was good for a 1.5 points, even though it doesn't reflect it in a 6-range bar. and then you came into 28.35. You'll see that that was the exact low. It held perfectly. I just ran out of, even if I wanted to take it, I didn't have any gas to take it. And then you can see the push back up to, and look where we tested. This was the biggest delta. So remember, and there's a reason why this is important. I was trading against not only that volume point of control, but this delta right here, right? See how this got blown up over here? It lost, right? I lost. Anyone who traded against that delta. Now notice, we came all the way back against that delta. See how you had responsive sellers there. So stop for a minute and think about that. What happened? Obviously, there was other people like me thinking, hey, that 44.86 delta, that should be money, right? So what did we all do when we got back there? So some of us like me, I'm not going to lose more than 2 points in Asia, but there's some people who are going to sit there and hang on to that trade. That's just what they do. Okay, I'm not about to lose. That was almost 5 points on a 1 to 2 point target for me. I'm not going to do that. But you've got to understand the thinking of the larger market participants. These guys expected this to hold. How do I know that? Number one, they had a long liquidation as soon as we broke underneath. Number two, they backside tested it, and that's where the big roll down came right into London Open. We pushed right up into 2 a.m., rejected down, and pushed all the way over. So what does that tell me? A, my thinking was right, okay? That was an important area. It was a good place to take a trade. Number two, I was right not to try to fight this all the way down and find the reversal, because I ran in danger of potentially not getting the bounce and having them long liquidate like they did all the way down here, and it could have turned a small down night into an ugly, ugly day. Now, let's shift gears. So that's all I have to say about last night. And particularly when I got up today and looked at that chart, I was like, that was a good loss. So now let's go to issue number 2. I want to go to the weekly profile here. This weekly? Nope. There we go. This is still not weekly, but that's fine. We're going to fix it right now. There we go. Why does that look messed up? Something's wrong with this chart. Hold on a second here. Not right. Hold on. I apologize. Let's get rid of this chart. What chart are we on? That chart is not right. Yes, profile chart. This one is right. Sorry, guys. I usually don't use this computer, but we're going to fix this really quickly so that we can have a chart. Weekly. There we go. That is right. We're going to erase all lines off of this chart. Okay, this is the weekly. Okay, see this 28.25, 28.26 on the weekly right there? Technically 27.26 and a quarter right there. Okay, see that area? So look, when we squinch that in, which we're going to do right now, you will see that area has become very pivotal. You'll see on this week where we tried to break out. So I want you to see this. See on this week, we tried to break out. We just opened, by the way. I'm not trading the first half hour, so for those of you who are, feel free to drop off. I'm going to cover this thoroughly because I want to have a good day today. Okay. See how we attempted a breakout, failed, pushed below, a second attempted breakout, long liquidation, right? Look at the next week, right? See how we came up underneath that? That 25, 27 served as resistance. Okay, so remember, this is over multiple days, right? Then finally breakout, backside test, push, right? So you can see how that week played out. We pushed right into it. We spent time at that 25, 26, right? And then we have what we're looking at for this week, right, which we're now on Wednesday. You can see that that 25, 26 became critical. That was a Globex low from Monday into Tuesday, right? And now Tuesday into Wednesday, that became a critical area. If we don't hold below here, right, look from the perspective of the weekly, right? Look at the perspective from the weekly. Your naked volume point of control and your TPO point of control on that weekly, which, by the way, I don't trade those, but I'm aware of where they are, right? sits right here at 28.14 to 28.12. You need to know that that support level's there because larger time frame traders are looking at this profile and making that decision, right? Additionally, that untested value area high from that week is also sitting right here at 28.25. Hence, the 28.25 to 28.27 becomes a pretty darn important area, right? Also, the value area for this week is shaping up to sit right here at 28.28. That's a lot of stuff concentrated all in one area. So look at that 25.28 in that context, and now go over to a daily chart, right? So we can do that really quick. So now look at the overnight in that same area. Okay, so here's that 28.28 to 28.25. You see we got in there the first time overnight. See how they tried to hold it? Why? I'm not the only one that can look at that location, right? This is an untested value area low from a prior day. That's what that purple dash dotted line is. You can see how they've held, and now see how we've come up underneath and see how we've had these resistance areas. 1, 28.28, 2, roughly 28.28, right? So the first thing that I know is that I need to make, and then I have my 24-hour volume point of control at 28.29.83. So the first thing I know for longs is if I'm getting long this morning and I'm looking for responsive buyers, I need to see an impulse move above 28.28. For me, the long game starts above 28.28 and not below for two reasons. First of all, I don't like catching falling knives. Yes, I know that we are likely to counter rotate back up and that all the inventory is short overnight. And we've had this nice spacing pattern here. Delta is below negative 20,000. And just like when Delta is above 20,000 and I avoid shorts, when it's below 20,000, I avoid longs without significant evidence, okay, that I'm going to be able to make money. Now, here's the caveat to that. On the long side, you get more responsive buyers in ES and NQ when Delta's below 20,000, negative 20,000, then you do get responsive sellers when Delta's above positive 20,000. Okay, so it's important. You can still get your bounces off of key locations in ES, and it's more likely to happen on the downside back up than it is to get shorts on the upside. The grind doesn't continue. The danger is, okay, I want to repeat, the danger is that you will, get caught in a sweep to the downside. That is the risk you bear in trading that trade, okay, is that you run the chance of getting swept down. So the way you resolve that, two things. Number one, if I have a small account, I don't want to trade this crap at all until I resolve it. I probably, on days like today where there's been overnight, a significant range expansion. You want to write that down. Significant range expansion overnight. We just went from a grinding small range to 20 points overnight on ES. That's a clue, right? If you look at Paul Tudor Jones, one of his most famous quotes, when the range of the market expands, it's a big clue. The market is trying to tell you something. Now, may end up being nothing, but I'm going to wait to find out that it's nothing before I put my dollars on the line. You can do whatever you want. I don't care about my zones, anything else. When the market gets into a long liquidation mode, it can get ugly very, very quickly. Okay, number two, I want to see an impulse move above 28.75 before I feel kind of warm and fuzzy inside enough to take a rotation down for a long, right? I want to see it break above, and come back into this area and maybe let the algo set me up with a long side trade, right? Number two, I'd like to see Delta get above negative 20,000, right? Number three, my swing high on Delta. Yes, I want to mark it off. This, since 6 a.m., was my last swing high right here. Just put a little line over it. Not a very pretty line. I want to see Delta trading above that point. That'll give me an idea that there's maybe been a character change and I can start pressing on the upside trade. If we reverse to the upside, there should be plenty of opportunity to take trades. It shouldn't go just in a straight line, and if it does, oh well. If you're worried about that or you have fear of missing the trade, then you should probably be buying right now. I don't feel like taking that risk, and I'm not going to. I'm happier seeing if we can break the 28.28 first, right? The next thing, here's your swing low, right? On presses down, you got to break that 28.20. And how do I want to express this? I think that this getting below this 28.28 is a big issue. Okay, maybe I'm wrong about that. I know Ralph had 28.22 in the room as his level. I think this 28.28 trumps the 28.22. Although obviously he was correct. It's good for a trade back to the upside into this 25 to 28 location. And then I think the first touch of VWAP. Notice we haven't hit VWAP since 3 in the morning. My guess is first time into VWAP, you're going to have a bunch of at least local traders looking to fade that. And where's the fade? Back to 28 to 26 area would be the logical area if you can get above. Now, think about this for a second. All the inventory overnight is clearly short, right? I want to explain why this is important. Inventory is short. Normally what would happen is you would expect a correction in the inventory from overnight and to shake those guys loose, right? Because people shouldn't, the rule of thumb is you shouldn't be able to short the bottom area of a consolidation after a big roll down and make a nice profit. You shouldn't be able to do that. However, if they cannot correct this overnight inventory and get back above this 28.28, that gives a very strong message that we probably have another big leg down to the downside coming up. Okay, again, one of the things when someone would say something like that, which Dalton is famous for saying, that straight out of Dalton's Mind Over Markets, that's nothing I've created, was that, well, that's great, but you don't know any of that until retrospect. Well, that's true, right? But that goes back to creating a thesis of, hey, if I take a short, right? If I take a short in this particular area and it doesn't get above 28.28, if your short survives, no, you probably have another strong leg down. Conversely, if you take a long and you can't quickly get back above this 28.28 over here, know that you probably are about to get splattered on the downside, right? So it goes to a secondary thinking of what your trade looks like. So this is how I would use that. Let's say I do want to trade aggressively and I've taken a long out of the open and I was lucky enough to take whatever, 28.22, right? I don't want to exit that trade at 28.28. If it impulse moves above 28.28, I'm going to go, hey, we probably got room to squeeze into 28.32, 28.34 location, right? On the other hand, if I am short, right, and I'm going, hey, I hope I survive 28.28, and it never penetrates that 28.28, I'm going to go, hey, we're probably breaking the low and have more leg to the downside. So it's a secondary method of thinking, but you still have to find the right location and manage risk properly. Again, I'm not doing either one, so I don't care what they do. I'll wait till I set up later in the morning. But the inventory question is important. So now let's switch and look at the TPO on the day time frame. There we go. So I'm going to duplicate this as well. I guess I just duplicated this. Let's just switch this back to the daily. There we are. And erase all lines. Okay, so number one on your checklist. I'm big on the checklist, right? So you should keep that checklist going. Number one, do we consolidate underneath value area low for the first hour? I want to know that. Right? If we can't get back in, first of all, above the 28.28, but even if we rally, if we can't get above the 28.3675, that increases the odds. It's an odds thing. So let's say it's a 75% odds that we would push up, and then by the end of the day, we have some kind of extension that pushes down to the downside. So if that happens, that's what happens about 3/4 of the time out of a substantial number of samples, right? If you go back over 3 or 4 years, you usually end up with an inability to push back into value with a push back to the downside. I can show you really clearly, because it happened last month, examples of where we opened up, consolidated underneath the value area low for the first hour, and then we proceeded to close at the high of the day. Okay, so, and we actually rotated all the way down and still managed to close at the high of the day. I still think the short side is harder than the long side. Okay, number two thing I want to look at, are we trending? Are we below, and are we one-timing to the downside? If we look at this day over here, see how we pressed underneath value area over here? See how we swept all the way underneath value area? See how we consolidated underneath value area and we ended up closing out at the extreme? Some pictures similar to that, but we're already underneath value area under here, and that gives us the opportunity to close at the lower end of the range for the day. Okay, when we close this all up, and I'm going to cover NQ for just a second once I'm done with this, okay? Number one, notice that there's a TPO point of control and a volume point of control, TPO point of control, and an untested value area low right here. See how we came off of that 28.22 value area low, untested, and we responded back up. So it's already been tested once. That means the second test makes it weaker, right? Now we're coming back, and there's a volume pointing control, naked volume pointing control at 28.25, and then there's the old TPO pointing control at 28.27, and would also be the trap back into yesterday's range from yesterday's low, right? And you can see we're just not ripping through that, right? So if you think it's short, it's probably a decent place to take a trade. Again, I'm not going to take a trade till after the first half hour, so whatever. Let them do what they're going to do. It doesn't matter to me. Okay, so looking underneath this, what does that leave underneath and looking to the left, okay, which is important. So the first thing I'm going to look at is see how this area in general, instead of looking at the individual trades, the first thing I'm going to notice is every time we dip underneath, going back to 727 area, every time we've dipped beneath 2808, we have found strong responsive buyers. Even with closing underneath 2808, the overnight session, we gapped and we trended all the way back up to 2824, which oddly enough is exactly where we're trading right now. So see this over here? That became resistance. Now notice that we've opened up inside that range and we have failed to close above that range to this point, right? And again, you would think the overnight inventory would get squeezed. If they don't get squeezed, it's a really good indication of a leg down. So the first thing that I know is that below 2808 and a quarter, I'd write that down. You have a good chance for a really strong responsive buy at that point. And at 2808, you would be down more than 30 points, right? That is prime real estate for counter traders. That 20 to 30 down is prime real estate. 30 to 35 down is really magical. We haven't had 50-point ranges in a long time. So in case this thing with Turkey is somehow Turkey matters all of a sudden, my gosh, I haven't heard Turkey mattering about anything since, hell, I don't know when the last time Turkey mattered. But there you go. Apparently everyone thinks Turkey matters this morning. The next thing I'm going to note from a daily basis, right? Notice going back to the 23rd, see how we have freely swept from 22, right? 22 all the way down to 08. See how that's been just totally slippery? Let me demonstrate. Look how we swept all the way in and all the way up. It's wide-ranging rotations. Wide-ranging rotations on the 27th. Big sweeps on the 30th. Big sweeps through this area on the 31st. This looks cool to traders because you're like, oh, that's really tradable, right? The problem is you tend to get slippage because there's no one particular area to defend in this. So you're going to have to really use the algo and be on your feet if you're trading in this area. Just realize the market's already telegraphing us some really good information, which is below 28.22. I really like to go to 28.08 and a quarter. That's what the market's telling me there. Now, will it go today? Zero idea, okay? But the market is telling me in this area, no matter what the profile looks like, that we like to skate all the way through this area, and it makes it hard to establish a position in here with tight stops because it gets slippery, okay? Moving on to the next addendum matter on the list, right, is when we go take a close look at the last time we were through this area, right? See how this chart needs to be repaired here? Let's open this up and just scoot it over. Okay, what are possible points of inflection? First of all, we had an anomaly at 28.22. I believe Rolf was absolutely correct on that. I think I have a level there that I posted last night. Let me look. Maybe I'm wrong. Do I have a level that I posted there, 28.22? I don't. I did not post that level 22. There isn't a valid anomaly there. I apologize. I missed it. At that unless maybe I didn't. Hold on. Let's go look. No, I take it back. I didn't miss it. There's not an anomaly. There's an old anomaly there at 28.22. Scratch that. Sorry. What do I need to get underneath to test that? And there we go. Inability to get above. Inability to shake out the short side trade. Expect a push to the downside. So in here, so we already know that this anomaly has gotten tested. That leaves a hole in the profile right here at 28.17 to 28.19. Okay, hole in the profile often will get a response. Not always, but often if they bust it, it'll often serve as a backside resistance. See how this whole profile is almost flat all the way through here? Again, it makes it really easy to trade through. Notice that the chart is hypothetically repaired at 28.02 to 28.04. I do have a level there. I would want to see a lot of evidence at that 28.02, 28.04. What I prefer to see actually down here, quite frankly, is I'd like to see a push underneath 28.08, shake out, maybe get an algo signal, but then I'd like to see it get above 28.08 and try to hold the backside test for the push back through this area is what I prefer to see in here. Same thing underneath 28.22, right? Getting underneath here, backside testing, because we already know that they tried to bounce out of there for a push back down is what I would look for. Again, I had a feeling if we couldn't shake out the overnight, I mean, it's not a feeling, it's a rule. If you can't shake out the overnight shorts after consolidating, expect a bigger leg to the downside, okay? So I just don't trade the first hour, half hour, because my track record sucks. The first naked point of control that's untested down here, I'm going to erase all this, okay? When you look at this chart, okay, once we get underneath 28.22, the first untested anything is this right here, right at 28.08. We have a naked, we have an untested value area low at 28.0875. Please note that in your charts. It's not even a naked anything else. All the volume points of control are tested. 28, wow, this is awful. 28.8150 to 28.80 is the first naked point of control that needs to be tested. Okay, so this is important. Remember last night, if you look on the Slack, I posted on the NQ chart, which I'm going to drag over right now as soon as I can find it. Yes, let's see. I know I have an NQ chart hiding in here somewhere. Yes. There we go. Okay, this chart alarmed me, okay? And what I wrote in the notes, as you'll see, is I said, hey, there's a problem here. So I'm going to erase the lines, okay? There's a massive problem here. And you know what that problem is? The problem is there's no naked points of control underneath to help catch this market. That's important because naked points of control tend to act as major support areas on backside tests, and they kind of provide a netting underneath. Let me show you why this is dangerous. It does not mean the lack of naked points of control that we simply roll to the downside. But what it does mean, let me show you this. So see the last time we rolled down here, see when we consolidated and we started to roll down? Notice how each naked point of control, see when we were up here, I would have gone, hey, we could trade down to that 72, whatever that is, 50 or 60 or whatever this is, and we should find responsive buyers, followed by, in general, this should help us out with a move back up, right? See how there were areas or nets below to kind of help and give us support, even though we traded past it. In general, the market absorbs here. Let me show you. See how the market gets absorbed when we test those naked volume. So these are half-hour bars on these time frames. So see how the market, see how when we got to that naked volume point of control, there's substantial counter rotation. And let me show you what I mean by that. The bottom point of control, naked point of control was 72.16, and we rotated all the way back up to 72.53. Those naked points of control institutionally provide traders with great location to get counter rotation trades and tend to act as a safety net under the market, okay? Now let me show you an area where we didn't have any naked points of control. Okay. It's been a while. I guess I should have shown an upside example, would have been better. But here we'll find it someplace in here. Okay, so two things. Number one, see where this big roll down came? Obviously, clearly, there's plenty of naked volume points to control all the way down. But what you'll notice on each of these days, see how each of those locations responsive buy. So we blew these areas up. These became resistance areas on the way back up. But even with that, this naked volume point of control acted as a stop. This naked volume point of control, these acted as stops. We didn't quite reach down here, but those areas tend to act as stops for the market to help out, okay? And when you get areas without them, okay, so this is a good example. See how when we got up here, well, I'm talking about this area right here. So if we looked at the chart, I'm going to scoot this over so you can see it and have it make sense to you, right? Because it's a great example of how the PA works. I would have said when we were looking at this day, I would have gone, actually when we got to this day right here, I would have said the exact same thing. I would have said, hey, you know what, we're trading 65.44 and there's no naked TPO. So there's no single TPO volume or TPO untested until here. And there's no dual naked TPO until 6,400, 63.85 right there, right? Now go look at what the market did on each of those areas, right? It's important that you understand that so you can understand the PA from today, what went on, right? So look how we come over. Hey, look how long it takes it to get down to that area, right? It's just a slow grind over multiple days. We just keep shifting value lower, and then bam, we finally push in. Notice that you don't have 2 points of control together, right? But even with that, if you look on this day, right? Okay, notice it comes right in front of that naked volume point of control, and then we come right down to the next naked point of control, and we get a responsive buy up. Notice what the market did is value was shifting lower. We created new naked points of control underneath, and we held those points of control, and the market repaired itself. But when we were up here, right, I would have said the risk is here from 65.40 coming back to 66.40 or lower, but that would be my first downside target to look for serious responsive buyers. And if you look, once we got into this area, that's what generated that big power move back up to 65.80. Okay, so that's a good example of where you have a big void of no points of control. So now when you come back over here, the market needs to repair itself underneath because there's simply no naked point of control. Now, here's the counter to that. Okay, you could say, well, Simon, that's true, but, and the but is this. Okay, the but is this. The market could repair itself and use these anomalies in between, right? Or use these swing high support areas as support resistance and use those locations to create a new anomaly. Then we can shift back up. That's all true. But what I'd want to wait for is I'd want to see the creation of value area lower. Then I'd want to see the market trading on top for that push back up instead of wanting to be a hero to catch this. Now, there's another way to look at this. As Daniel rightly pointed out to me in his overnight missive that he sent to me, that there is a naked volume point of control on the weekly at 72.67 and a quarter to 72.80. I would have that marked off on my chart. If I were you, I would be looking for that setup personally for a long, and I'd have that noted. That's another 100 points down and completely achievable. Okay, so 72.67 and a quarter, 72.70 area is prime location. This is also the second distribution should serve as a pretty good support area. Also, other areas that are important off the weekly, the value area high here on NQ if you trade it, 73.03. That's also a round number, should provide responsive buying. You can see that that is not uncommon when you test a top of a value area for the first time. It's not uncommon to see how we push into that value area and then get the responsive buy. So if you're an institutional guy, right, you're just saying, hey, I'm just going to start accumulating at that value area high and look for the response back up. And then the same story is true for the value area low. See over here when we look at this? See that when we got to this, here, I'll change the color. Right, see how once we push below that value area low in here, that's what provides that huge, again, weekly chart, huge counter rotation, right? So if you're a day trader, you're like, well, wait a minute, I took a freaking absolute slaughter down here. You just have to be aware of what the PA looks like intraday when they're starting to repair. And you can see it here. You start off with notice you get a higher high after breaking the first swing low over here. You get a 50-60 back. We start making higher highs, higher lows. And then look what they squeeze into on the weekly, right back into the TPO point of control where it finds rejection. And then if you look back on this side over here where we finally exhausted, we do the same thing on the other side. We come back and test the value area high on the weekly. We attempt to hold above. We can't. We fail. We backside test. We roll to the downside. And that's important because it does the same thing on almost all time frames. Okay. So looking back at this again, I think we can slip all the way through this area. This would have made a great short anytime besides the first half hour for me. I don't mind not missing it. Mostly I am eternally grateful that I took one stop last night long and I didn't get in my mind that it has to rally. I really thought we were moving up and I was wrong. Risk management trumps what you think about the market. Period. End of story. Nothing else to say about that. So that's where we're at. NQ is currently down. I have zero idea. I don't even have the dome up on NQ anymore. I'm not trading it, but let me look. Chart. Dome. It doesn't say how much. Just tells me where it's trading. Okay, great. Hold on a second. Oh, that's not what I wanted either. Crap. Oh, there we go. Sorry, guys. Brain went on vacation there for a second. Down 75. I think you could easily have down 200 today, especially in the area we're in. And then I would look for responsive buyers in there. NQ is highly illiquid when the market gets like this. If you're trading it, best of luck. Because your stops, I've seen stop runs in this environment of greater than 10 points. So just be aware of that. Anyways, that's my 2 cents. I'll wait till after the first half hour. We're down 26 points. Again, I would rather trade around that 28.08 area. My thesis was if we got underneath that 25, 28, that we had a chance to roll lower. And I just don't trade in the first half hour. So shoulder shrug, I didn't get run over either. That's all right. I'm cool with that. Remember, whatever you do, whether you trade. So I had a long conversations with multiple people about small account versus large account. And this is very, very important. So I am in the room going to trade a Top Step Trader account. So I traded a small account in the room as if it were a small account. And someone pointed out that I didn't have the psychological pressure of having a small account because even if it didn't work, I had my large account to back me up, meaning any loss I took, I didn't experience the same pressure. So fine, I'm willing to step that up. I'm going to trade the Top Step Trader Combine, right? And the rules are pretty strict. You cannot draw down on a 30K account more than $1,500 from peak to trough. That means even if you make $20,000 in the account, you can't draw down more than $1,500 or you're done. Number two, you can't draw down more than $500 in a 24-hour period starting from 5 p.m. Asian session till 3 p.m. the following day. You can't trade news, and you can trade up to 3 contracts on that $30,000 account, which is ridiculous because with the stop, you just can't survive that initially, right? So I'm going to use a pyramiding type trading process. And I got my butt kicked first day out of the gate with a down $200 right out of the gate, 225 actually, or 212, excuse me, $212 out of the gate. So, and we're still just getting squashed on the downside. So just caution on the longs is all I would say until you see. I would look for, okay, so this is important. Let me go back over here, by the way. An easy way not to get rolled over unless you just have to catch the low, right? When you are trading, when you're a small account and you're trading and you're getting this price action, see how we're just going straight down in the first half hour? So see here how we started up one timing to the downside, to the upside here, and then we started one timing to the downside. So notice 2 things that were effective here. I want to show you. This is on 8/13. You can go back and look at the individual date to play that out, right? When you look at this, see how we're one timing to the downside? That one timing ends on this bar right here. See that right there? that one timing ends. Okay, we're first time we were able to get above the prior 30-minute trade. See how that, when that ended, that started the push back to the upside. Notice that push back to the upside, it culminated with a retest of the mid on the day. That's the 50 retrace right there. Then notice on the push back down from that, right? Notice the first 50, 60 back. So notice we pushed up, right? And then we rotated back down. Notice that when it came back into that 50 retrace right here, I want to highlight this for you. If you had taken the long on the first backside test of 28, 26, 75, so this 30-minute bar, right, closed right here. So it closed right at 28, 26, 75. So why do I know the counter rotation? Again, incredibly slippery through that 28, 22 to 28.08. Okay, so, and we're just falling straight through it. I don't feel bad about not being short. I feel grateful for not trying to capture a long in the middle of that crap. Who wants to get run over, right? The trade rotated back up to from 28, 26, 75 back to 28, 30. If you're a small trading account or a large trading account, that is a good place to go look for a trade setup. That was from the 13th. Also notice that once we did that 50, 60 back, see that right there, where we came back and we never broke the swing low. So hypothetically, this is the difference between a big account and a small account. A guy with a big account who's not a leveraged trader is going to go, that's my 50, 60 back. I'm going to take my 50, 60. I'm going to put my stop one tick below the low or 1 point below the low, and I'm going to hope for a bounce back up. That trader took the long at 28.28, right? He took heat all the way down to 28.20. Remember, he's non-leveraged or minimal leverage, right? And he got rewarded for holding that trade all the way back up to 28.40. The small trader who's leveraged took that trade at 28, whatever it was, 28.26, excuse me, 28.26, not 28.28, 28.26, right? He took relatively little heat and he got his 4 points. He got his 2 and 4 point scales on the day, right? And then he just stood aside on the last hour of the day and he didn't get squanched on whatever noise was going on. And hopefully on this day here, he was able to figure out that we were going to push back up and come back and re-auction the most poorly auctioned point of this. What's my point behind that? This is as open drive lower, range expansion as it gets, right? So what am I looking for to change my opinion if I don't want to take losses trying to catch the low like every other retail trader who's gotten bone crushed this morning trying to catch a falling 18-wheeler, right? What you do there is you wait for this 30-minute time frame to stop going down on the one time framing, and then you start to work your 50, 60 back. And you know what? If it just V-shapes back up and that upsets you, you have fear of missing out, and you just need to be able to sustain getting run over on the way down. I don't have that issue. I don't mind not getting run over on the way down. And those are little things you can do for your trading account that will keep you from getting annihilated on days like today. Because most days, so this is important, most days, guys that are used to catching open gaps down and just waiting patiently for the rotation back up, if you wonder how you give back your P&L from months in a period of weeks, you get a series of days like this where everything you catch is just crushing you to the downside, right? So look how we're going right to that 28.08. That read was profitable for me because when I go back to my chart for today, what did I have? Let me look. Here, I'll show you all what I had here real quick. White zone, blown up, right? That white zone normally works great. That was a naked point of control, blown up. What do I have underneath here? That's my next target. That's the next thing after looking at the chart. That was the area. I know here we are at that 28.08. Everyone and their brother is going to notice that 28.08. It's 33 down. We should get a responsive buy here. I don't care. I'm just grateful my capital's intact, okay? And I can wait patiently. If you avoid these days like this, first of all, markets generally don't go down. If this is the turning point in the market and we're rolling lower, right, we will start to get counter rotations up that will fail. They'll be marked by 5-minute tick divergence, okay? They'll be marked by big delta pushes up that we immediately get below. The algo will fire, right? They will be marked by an inability to make a recovery of more than 50, 60. They'll be marked Oh, wait, you can't see that. Sorry. But I'll fix that here near term. Here we go. Why can't I move this? Look at that, 2808 got the response. That's pretty funny. Where is this thing? Hold on one second, guys. I apologize. Start. Okay, here, let's try this again. See if that works. I don't know why this is not working. There we are. Okay. There, now you can see my other computer. The zone blew up. See that? So if I look hypothetically, right, if I tried that 28-22 the second time through, I'd have gotten smoked, which is not a problem. I have a zone there to begin with, so it's not an issue for me. But I would have already sustained trading the way I normally do, i.e., the way I used to prior to having the algo. I would have traded this location. It would have been an immediate 4-point stop for me. Okay, so this was a profitable morning for me already because I have zip to make up, right? We recognized the range expansion. I knew to pull in my horns in terms of being long. And the only thing I wish I had done better, and okay, so I want to address this. I have this conflict with my coaching clients all the time. I knew that if we couldn't break that 28-28, that we'd have a big leg down from there. Okay, and so I get a rules conflict there. Was my read correct? If I shorted 28-26, stop above 28-28, would have I made a lot of money? Answer, yes. As those of you who are in the room know, when I take trades inside the first half hour, my trade track record's close to 50-50. Okay, I did yesterday take a trade inside the first half hour, acknowledging it. But normally, and particularly when I try to short in this market inside the first half hour, I tend to get run over. This is the abnormal response the market gets on gap downs. The normal response has been a big push up to attempt to close the half gap, prior day's value area low, et cetera, et cetera, et cetera, right? So I skip it, right? So I can't go. So I'm speaking to my guys with my small accounts and the guys who get frustrated when they're not short, right? You cannot expect to catch this move and supposedly magically know when you can trade the first half hour and then go, but I want to know all the times I can't trade the first half hour and avoid getting crushed, right? It doesn't, there's very few people that have the skill set to be able to look at that first 30 minutes and go, oh, I can read this perfectly. I can't, right? So even though I had all the pieces there, I understood that below 28-22, we probably had a pretty easy trip down to 28-08, right? All of that was correct. What I needed it to do was to set up outside of the first half hour, give me a big delta on top, right? And give me a roll to the downside. But that being said, let's go look at what the algo says here real quick. Let me remove this. So number one, we can come look over here. I'm still on the wrong thing. Here we go. So first of all, I do not have my biggest delta bars up, but I will fix that. So in the morning, I have so many lines here. Hold on a second. Let me fix this so everyone can see it well. Let's do this. Chart settings. 6. And let's get rid of this. Okay, so there we go. So number one thing we looked at this morning. This you can put in your notes. You should have this pinned on a checklist. Delta was greater than negative 20,000, number one. Wrong line. Here we go. 20K. We walk in and we are already holding below. And see how we backside tested that negative 20,000, right? And I know immediately when I see the delta at negative 20,000, I am in trend territory. Does not mean that it will trend. It simply means that I am in danger of getting a trend. Heads up, right? Number two, we know that the price action on the downside on a trend day can result in better counter rotations than the counter rotations on a trend day up. Saves our bacon in the morning. Number two, where's our deltas, right? So from the open, which is right here at 830, or swing high. Here's 830 for all practical purposes. And hold on one second. Let me get the other algo going really quickly here. As you can tell, I'm going to wait out the first hour completely, guys. So just consider this one massive coaching session that I'm doing for myself, and others can benefit from it. Okay, let's look. And if you need to trade this, by all means. Okay, that is correct. Amundo. I just have nothing but short signals here. Let's do something here. File. Open chart book. 1 second, guys. ES. John. Folder. Sarah charts data. Okay. John. SA. Thank you. I need ES. It's all right. We'll just go with this and I'll flip it over. How about that? Chart settings. Oh, crud. That is not what I wanted. Okay, it's all right. Here, I have it over here. I'll just do it here. 1 second. Dun. Oh, there it is. I just don't see it. Hold on a second. Okay, here we go. So I can do it this way. File. 1 second. I'm going to have to get this set up. 1 second here, guys. Settings, find symbol. 1 second here. I had to go to my other computer to get this. And I am looking at now it should apply. Let's see if this works. Hold on 1 second. Bonds are flying, by the way, as they should be. And this is downloading the data for this. So hold on 1 sec. Well, I do not know why this is taking so long, but okay, I can't show you, so I'll have to do it manually. Ah, there we go. Oh, or not. Okay. Okay, let me spread this out. On the open, biggest delta around here was, I need this that algo up and running. Okay, let's see. We had pre-market 15, 15, 15. I spy 1544 at 6 in the morning. Okay, so let's go highlight that and see if we got anything bigger afterwards. Okay. There you go. Notice that we can't get a clear close on top of this. Let me modify this so you can see it easily. I got to get rid of that color. Gray. Okay. Okay. So this is my biggest delta pre-market. At least that's what I'm going to go with, right? Right there. Notice that we try to get above all the way through here, and we have an inability to close definitively above that point. They attempted here. They get below. They backside tested in pre-market. Then after we open, see how we tried again to get above this delta? And there's no bigger delta. This 1502 becomes our biggest delta right here. And then we finally close back underneath. There's your momentum. So this is your last momentum push to the upside, right? That was your other key right there. The star indicates the momentum push. There's your last momentum push to the upside. And you'll also notice, look at all the momentum pushes right through this area. Here, I'm just going to highlight it. There's all the stars right there. It pushes to the upside. We close underneath. Quick backside test at 846, right? And now we roll to the downside. Our biggest delta in here on the day is from the day session is this 1502, which lines up with the overnight big delta. And now looking as we're rolling down, right? What I want to see is where are my big deltas as we're going lower, because they help me figure out where I can get my reversals. So first of all, the 3291, biggest delta, the 24-hour of the 24-hour time frame, right? Has this loaded yet? And is it working? Oh no, it's not working. Let me see if this is all off. Hold on a second here. Great. Cancel. Chart settings. Right click, copy. Okay. One sec, I'll have that algo up and running. I got to change this master symbol. You can see people are trying to defend that 2808. That's a fine place to try to take the trade. Again, I'm just letting the first hour. I want to see the one timing to the downside stop. Okay. Okay. Second here. And that spreadsheet is not working. That is a problem. Okay. I will have to resolve that algo in just a minute. I'm having an issue with it. I'll get it fixed. So as I'm going down, right, this becomes my next biggest delta on the way down. Notice I'm not getting any stars momentum pushes to the upside, right? As a matter of fact, I've got a trend line momentum down right here. That roughly looks like that so far, right? I know that 3,000 is my biggest delta on the way down. Do I beat that with anything? I don't. So far, all the way into the low, my biggest negative delta into the low. So notice the deltas get smaller and smaller and smaller and smaller. So number one thing I'm going to say is I would expect responsive sellers here. Okay, so this is the area I expect there to be responsive sellers, 28.17 to 28.18. I don't have a level there from the TPO, but I know my biggest, I know that I had someone who dumped a boatload of contracts there, and it'll likely get defended. I have other big deltas on the way down, but nothing bigger than that, right? I also know that I have that 28.08. We knew that we were slippery between these two areas, right? I want to see on the bottom a big delta get formed, and I'd rather see a star push to the downside, a momentum push right at the low, and then get above it, than I would like to see a momentum push up. I'd rather see a momentum push down right at the bottom and then get above that last momentum push. Kind of like, oh, well, there we go. Here's a good example of that. So see how we got this momentum push down? If we get behind this guy, that should be the squeeze back to 28.17, 28.18. You'll notice they pushed right up into that bar that created that momentum push down and rejected out of it. See that? So this is all, if you're nimble, great scalping stuff, right? So now I know above 28.11 probably gets me 28.17 realistically. And then I know my target from my support and resistance is down at 28.04. And this has shown no interest. You got to get above these big deltas in here. See all these guys that were just huge in here, 22.83, 23.84, 32.91 is the kingmaker over there right now. Or we need a new kingmaker down at the bottom and to get above them, right? But I want to see it push down like this and then get above. Let me show you what that looks like when we're actually moving to the downside. Would look like, okay, so see, this is a decent example here. See how this is your last push to the downside, right? And you say, well, Simon, that's all the way off the low. And I would agree, it is all the way off the low. We already bounced from 28.20 to 28.25. But look what happens to the right as soon as you close above them, right? So notice two things. First of all, as soon as you closed above that guy, look at the push from 28.25 to 28.29. But more importantly, look at the backside test almost to the tick. They front run it by one tick, and now they've pushed all the way up to 28.31. It's a great trade location. So what I'm trying to tell y'all is you don't have to rush to catch the bottom. There'll be trades off the low that should make plenty of money, and we can do that after the first hour. We all know that the reversal period will probably come closer to 9:30 to 11 o'clock on a day like today, and that we are still in one timing down territory on the 30-minute time frame, right? There's no need to be in a rush to be the first one to catch this low. And there's two reasons for that, right? If you're a scalper, so where I see people get confused on days like today is they want to be both a swing trader and a scalper, okay? If you were looking for the bigger swing, you've got plenty of time. If you're a scalper, you could have just taken the 28.08 with a 2-point stop and you had a 3-point trade in your hand, right? Where I see people coming into conflict on days like today, which, by the way, I'm still not conflicted. I just want to survive this stuff. First big down day in a long time. I'm just glad not to have gotten blown up. Where people get conflicted is if the trade is worth 3 points. So let's talk about that. Let's pretend you took 28.08, but now it's back to 28.0875, and you thought you had 28.20 out of the trade, right? What I will see traders do is goes, well, I should have sold the 28.11, but I thought I could get 28.20, and now I'm mad that I didn't take the 28.11, and now it's come all the way back to my entry point, and I'm going to close it out at 28.08 because I took it there, and now it's back to 28.10, and I could have had 2 points on it. But even now, if I have 28.08, maybe it's going to bounce back past 28.10 and get back to 20. See how confusing that sounds? Versus, look at Ralph's post this morning. I'm going to take 28.22. This is off the Slack channel, right? Thank you, Peter. Peter's buying the August 15 and August 24 SPY 282 calls. So look at Ralph's this morning. Bias aside, my first trigger is looking like it's going to be long 2250. Scary this early in the session, using caution. 2450 needs to hold to keep this trigger valid. 2250 broke, leaning short now. Yes, changes that quick. Short trigger 1850, 1650 an obstacle to 2807. Why 2807? And then he posted his work this morning, okay? The point is, Ralph scales as he comes in on these trades, and he's real patient. But the point is, you notice that he's not talking about, I'm taking 2250 for 2840, right? He's managing that trade as it goes along. Ralph's a scalper. I've never heard Ralph go, I'm taking 2220 for 2820 for 2890. Never heard him do that. He stays consistent in his approach and how he executes his trades, right? Don't be both the guy that wants to scout for 3 points and trade for 10 points. Your life will be miserable, right? Make a choice as to which trader you are, what fits your account. On days like today, what fits my account, both my large one and my small one, is to let the dust settle, right? So I don't make any emotional decisions when the range is expanded, when we've had on long, slow grinds of up 10, right, and had to wait all day for it, to, oh, we're going to have 20 points in the first 30 minutes of the day. Yeah, I'm good sitting that out, right? Now, if this becomes the norm, right, where we're having 30, 40-point rotations, kick ass. I'll adjust and I'll start trading every 10 and 20-point rotation, looking for location there. If this is a one-day wonder, right, I want the dust to settle, and I want to see if the rotations get really tiny, and then I'll look for my key setups on the deltas. This cleared up. It didn't. Suck. Okay. But I can fix that just the same. Then I can start trading my setups as appropriate to a 2 to 10 point range versus worrying about whether we're going to swing 10 points or above. The point is, I don't know. All I knew was that 28.22 to 28.08 was a dangerous area to trade. And that puts me, in my mind, up on the day. Mission accomplished. Now my next mission is to go find some profitable trades through the course of the day. And I've laid out, if you're a conservative trader and you don't want to walk out with, man, we had trend day down and I had max stop out trying to get long, right? Wait for the one timing on the downside of the 30-minute chart. Wait on a half-hour chart. We're working on the second bar right here, right? Wait till you trade just one tick above the 30-minute time frame, and then you can go to work. It will, yes, you will miss the low. You will also miss getting run over if it's truly nasty, ugly down day. And that's probably what I'm waiting for, is the 30-minute time frame to stop one timing me down so I don't get annihilated. I just don't want to lose money on a day like today. And obviously, I've already missed the short, right? I mean, 28.28 to 28.08 is 20 points. It's a pretty nice short, right? So we're talking about not getting focused on a one-day outlook or a one trade outlook, or making your trade have to work on this day. What you will usually see if you didn't trade it, okay, so what people will usually say on days like today when they didn't trade it is, I would have done X, right? And you would have always done it perfectly in your mind, okay? What people who do trade it go, I thought we would bounce, or we had a 10-point rotation and I got run over, right? So I stopped putting myself in that mental box of being trapped. And I go through my checklist. I'm below prior day's value area low. I have failed to penetrate back inside prior day's low, right? I have started one timing to the downside. I would like to see that one timing end. By the way, when that one timing ends during New York lunch, that tends to be a consolidation before a following leg lower. Okay, just be aware of it. When the one timing ends over New York lunch, that often is a pause before a rotation back lower. You really want the one timing to end either after New York lunch or before. By the way, we're coming into that 28.04. Again, I'm not going to catch a falling whatever the hell this is, meteorite. I'm just going to let everyone be smarter than me and figure out where the bottom is on this thing. That's my perspective. I'm waiting for the one timing to end before I go to work. Why? The ranges are wide. I should be able to pull out 2 to 4 to 5 points out of that, and my life will be simple. Bonds are rallying like a mother. Look at the here is the, so weird. Is the complete opposite. That is the bond chart right there. I'm getting buy signal after buy signal on the bonds right now. And I have all the way through here. First buy signal came at 7:41 a.m. You can see that gave a lift. If I had taken that entry, which obviously I wish I had, that entry would have been 20, 30 seconds. Using my normal stop, that would have put my stop at 6 ticks, which would have put me at 14, 30 seconds. You'll notice the trade stopped. and it's now pushed all the way up to 30 seconds, which is given a 1-to-1 RR, and it probably ends up being nicer than that by the end of the day. Okay, so I'm getting momentum signals on the algo. I'm getting constant pushes to the upside. Delta's improving as price is improving. That's a beautiful chart on the bonds, and I'm getting just the opposite. I'm getting short sell signal on the algo after short sell signal. I don't think any of them have failed so far. This one failed, but if you looked at the first one in the series, came all the way back over here at 844. That was the first short sell signal. The algo fired. Yeah, I wish I took it, but I was busy going through, laying out what my day was. So one last note for guys in the room. I was here till 12:30 last night because I was pissed off about my trade, and I had to work through if I did anything wrong on that trade or not. I didn't, right? But it took me till 12:30 to figure that out, okay? And I just wasn't going to go to bed without getting that figured out. That was a good trade that just stopped, period. Number two, when I got home, I got to bed at 1, and my twins both woke up at 3:30 in the morning, and I have not slept that well since then. I was up from 3:30 to 4:30, and I caught another 2 hours in between there. So if I sound like I'm getting really tired, I'm pretty sure I'll start to run out of juice this afternoon. I say that because if you see me getting sloppy, or you just say me calling things for the sake of calling things, when I get tired, I go, I think this is going to happen. I'm taking this trade, right? And I don't point out an algo setup. I don't point out a structure setup. I don't point out a delta setup, right? Or I just sound like I'm out of my mind. Say something, right? It's hard to tell if you've never been fatigued. It's hard to tell when you're fatigued. I have plenty of coffee with me, but it's hard to tell you're fatigued. And even if you don't say anything, just go, I'm not going to follow that lunatic. He's tired, right? That's my disclaimer right now. Go, that guy sounds like he is freaking needs to go to bed, and I'm not going to do a damn thing he says. Turn me off if you need to. I don't care, right? I want you to protect your capital and survive days like today, because if this is the beginning of a change in character for the market, right, we will have plenty of days where the shorts will work fantastically and the longs. These are my markets. I make 10 and 20-point trades in these environments. As long as we can sustain these rotations, I make a lot of money in these particular conditions, okay? So I want you to be aware of that so that you can judge what I'm saying. So if I'm saying something, I should be saying things like backside test of a big delta, momentum star being backside tested, failure of a momentum star back to the downside, push lower, test of VWAP. I better be given a reason, because my I think it's going lower or I think it's going higher thesis when I'm tired doesn't work very well, okay? So anyways, and you should judge for yourself whether you're tired too. So there should be some good trading opportunities today. I'm going to drink some more coffee. That was an hour coaching session effectively, guys. So your room membership paid off in spades. And if you joined us on YouTube, just keep that in mind. Everything I said, that's good stuff. That is stuff that will help you thrive long-term as a trader. The most important thing is the bonds. I want to get rid of this. Escape. Escape. There we go. That over here. So in the meantime, I need to go get one algo up and running. It'll take me a couple minutes. I don't have anything else to add. Like I said, 2808 slowed the thing down, which made sense. We're still one timing to the downside. When that one timing ends, that's when I'll probably go to work today. If you feel like you're in a good location and this is your trade, Mazel tov, more power to you. I think the zone should hold that I posted. They're usually good, but the environment's changed, and the guy who most quickly recognizes the change in environment, A, protects his capital, and B, is able to take advantage of new trades that set up. Let's go see if any new deltas have popped up here. And I think I'm going to leave this clean for today. Like, no, yeah, like this. And so what do we have that we're dealing with over here? So the first thing I am noticing, hold on one second here, is that VWAP is a mile away, 2819. Okay, notice that the odds are by the time we get here to that biggest delta, that VWAP will probably be right here as well, number one. At the bottom, we have, who's big on the bottom? Let's go find out. Here we go. Last momentum push to the downside, right? So we've closed above. You want a low risk trade and you're willing to take stops. So two requirements. You're willing to take stops. You have a low risk trade. You've gotten above your last delta push, your last momentum push down. That's right here. You've now closed above your stop. I'd put it 2 ticks below that low and be willing to re-enter it. That gives you a risk of 28.0850 roughly down to, let's just call it 28.04, 28.0450. It's 4 points of risk or less. You can do the 50-60 back. I'm not eager to take that trade yet. What I'd like to see is a really big delta print on the bottom, greater than 2,000 or 3,000, somewhere in that range, and then get above that guy. Until then, I'm going to assume the trend down. Although, right, the same story is true now. That 28.08 can be slippery back to the upside too. Remember, what's easily triggered down is easily triggered up. The one thing I'm noticing more than anything else is we're having 20-point rotations down, and the counter rotations are 4 points, right? So that's a valid setup. I'm not taking it, mostly because I need to drink some coffee and go through my notes one more time and fix this algo over here. And I will wait to get set up. And then I will be using the momentum changes on the algo for today. I will be using those momentum changes. So remember, if I take a trade off the algo, the stop is 2 points. Okay, I'll point them out. This algo specifically that shows me that trades momentum for me, right? The stop on this trade, I'm looking for the first bar in a series, and I'd like at least 4 bars printed in between the bar and the bar I trade. So like, this trade here, right, my entry would have been right here. So if you look, I could still get stopped, right? So if I short that at 28.0850, right, my stop would be 28.1050 right there. You notice it almost got stopped before getting pushed to profitable, and it missed. It may have hit it to the tick on the second time through if I didn't take it off. But what I want it to do is this: print like this, give no heat, and give the extension down. And I prefer for it to come after some kind of stretch back up, right? I want it to really be the beginning of a new leg down is what I'm looking for. So I'll point that algo out as it sets up. And then finally, let's just get our profile up over here to the right. Nope, not what I wanted to do. There we go. Something's wrong here. That's what's wrong. There we go. And there's our profile on the day. Clear low volume node sitting right there at 28.15. You can see all that build right there, and see how right at that 28.19 begins a new low volume node area through there, and that's where that big delta is as well. And then we'll be breaking this out additionally to see where the one timing ends. So right now for the one timing to end, I've got to trade above 28.15 and then I'll start looking for 50-60 back for potential reversal. And I'll also be watching the mid from high to low to look for potential short location setups as well. Notice that 28.11, see how there's just a little hole right there in the profile? You can see this is where all the volume has gone off. We got to obviously get above that 28.12 to come back and repair. And the back of this area is at 28.19. I expect rejection right in here, right when we get back here. A rejection back down. That'll also, by the way, if we get up there, we'll end the one timing. So we may not make it there if we continue to trend down, right? So that's my 2 cents. By the way, a very nifty trade that you can do that Ron points out all the time is when you're one timing, if you get right up to the top of that half-hour time frame, you can short the very top of that half-hour time frame and literally put your stop 1 tick above the top of that time frame. Because if you trade 1 tick above, guess what's happened? You've stopped one timing. You no longer want to be in that short. However, so you can manage that trade with a very tight stop, But if it doesn't stop one timing, you're very likely to come back and break that low to the downside, and you can catch a vicious trade going down. I don't do that particular trade because I'm not great at the specifics of it. It just takes a lot of, he's got a lot. I just don't remember the trade, but it's a good trade, mostly because the RR is so high. Anyways, that's my 2 cents, guys. Let's go make some money. Bonds still rallying, and look at how little oomph there is to the upside so far, right? You actually want to see them be able to take a stand and actually do something here besides get stuck where they are. And by the way, that 28.12, remember, I wasn't the only one looking for responsive buyers there. Do not be shocked to see responsive sellers there. And we'll use the deltas, right? So right now on the way up, this is our best delta. This 1982 so far is our best delta on the way up, okay? We'll want to see how we pushed right to 28.12 and rejected, and you want to know why? Because people are stuck at the white zone that I printed between 28.12 and 28.14, and they're going to offer out, right? Patient traders who will wait for the backside test will offer out there. So anyways, that's my 2 cents. Let's go make some work, get some work done. I don't have anything on Skype. I hope everyone's doing well. And guys on YouTube, thanks for joining me. That was a free coaching session, so good stuff. If y'all like to join us in the room, just send me an email at tradertough@gmail.com, and I'll send you a 5-day pass along with the details about the room. Have a great day, guys. I'm going to kill the meeting now, if I can find it.